back, the Canadian dollar has been, so far this year, the worst performing currencies among currencies in the G10. Let's get more insight on this with Jayati Bharadwaj. She's Director of FX Strategy at TD Securities. Jayati, thank you very much for joining us. Let's go to, first of all, the performance of the Canadian dollar. We've noticed recently, of course, it's performed positively in the way that we most often look at it, and that's versus the US dollar. But that's really a story of US dollar weakness. How has it done versus other major currencies in the world?
Thank you so much for having me. And as you correctly pointed out, the Canadian dollar has benefited versus the broad dollar, and that's mostly come from dollar weakness. But it has actually underperformed most of its G10 peers. In fact, if you were to line up year-to-date performance of the G10 currencies, then the Canadian dollar ranks dead last. I think one big reason for that has been the unfortunate North American beta that Canada has to the US. In the last 3 months, we've seen a massive loss of US exceptionalism. Investors have been forced to look for alternative safe havens outside the US, and Europe has come up as a prime candidate for that, especially on the back of the fiscal announcements we got out of Germany and EU, a few weeks ago. That has really primed Europe as a better candidate to the US. In fact, we've also been seeing that in equity inflows, whereas US equities have been seeing outflows for the last few weeks, whereas people have gotten more optimistic about Europe, and that's where we've been seeing a lot more upside outperform.
Is the price of crude oil a significant factor these days? Over history, there have been times where the price of oil is a key factor in the pricing of the Canadian dollar. Is that still the case, or is the currency market focused elsewhere?
The dollar definitely is a key important driver for the Canadian dollar. But if you look at the correlation of CAD to oil prices, then that relationship has actually weakened over time. In fact, the Canadian dollar reacts a lot more to global risk sentiment, which is why, even the oil prices have been weak, that potentially is also weighing on the Canadian dollar. But I think it's a lot more of a global asset reallocation story, where people are now being forced to look at investments outside North America, and Canada still has strong economic ties to the US. It's still the biggest trading partner. That's where it is kind of underperforming, because now people are looking more towards Europe. They're also now looking at European satellites. So that's where the NOKI, STOKI, and the European satellites are benefiting a lot more than CAD is. CAD will benefit from dollar weakness, but unfortunately not from a global asset reallocation here.
What happens if the U.S. and China thaw out their if trade relations improve between the U.S. and China? What happens to the U.S. dollar, and by extension, what happens to the Canadian dollar?
So one place where we're actually different from the street and consensus is that we're actually bracing for a modest bounce back in the dollar in Q2. And that can potentially come from some of the trade tensions between the two big economies thawing out. One other big thing which can potentially lead to that is the Fed's June meeting. We all know that the Fed is stuck between a rock and hard place, between the growth and inflation dilemma. Data, as we all know, has not been collapsing to the degree that markets are priced in. So we do think that June can potentially be a meeting where the Fed might have to pause and stay on hold. You also are starting to see the U.S. administration starting to soften their stance on trade talks with China. All of that can feed into a little bit of into giving the dollar a bit of a bounce back, which can start to weigh on the Canadian dollar. We actually think that dollar CAD can go higher to 140 from here. It's currently at 138, but the Canadian dollar can see some near-term weakness before it starts strengthening towards the end of the year.
We have a newly elected government, of course, headed to the House of Commons in Canada, newly elected Prime Minister as well. Before long, there will be a new budget in Canada, quite possibly a new fiscal direction for the country. Mark Carney, the Prime Minister, is certainly pledging to rein in fiscal spending as a proportion of the Canadian economy. And of course, tomorrow we get the beginning of direct talks between the Prime Minister of Canada and US President Donald Trump. Is there anything there that could affect the path of the Canadian dollar?
Absolutely. I think it has been a very historic election. In fact, Carney, I think, is taking the right approach in terms of reining the entire parliament in. He's trying to take a very united Canada approach to the US, which you've also seen some support from other parts of the government for him. I think the sooner Canada can start to implement a fiscal stimulus, which can potentially be by the end of May or the end of June at best, that can really start to help uplift the Canadian dollar outlook. In fact, that's something which is very interesting because, while the US is taking a very, very aggressive stance on trade deals around the world, it has actually forced a lot of countries to look inward and to start boosting domestic growth, which is what we saw in Europe. And hopefully, if Canada can replicate that, that can really give a nice boost to the Canadian dollar. And if they take a very good approach with talks where they present a united front, then that can also give a very good tailwind to the Canadian dollar in the middle of the year and in Q3, we think.
Jayati, thank you so much for this. That's Jayati Bharadwaj. She's the Director of Foreign Exchange Strategy at TD Securities.